Hey guys, I wanted to take this opportunity to remind you all to like and subscribe. It really helps me to keep getting the best guests onto the podcast. So I really appreciate it if you did. And now onto the video. So I wanted to move to more of your investment framework. So could you describe your investment framework or investment philosophy?
The investment framework starts with a secular thesis. Where are what are the big narratives driving certain assets? So we've had demographics being the biggest of our lifetimes, and that's the baby boom generation and their working and investment lives, what they've done. That's what drove the equity market bubble. That's what drove a whole bunch of things, drove bond yields down, drove the increase in debt. All of this came out of demographics. The flip side of demographics is countries like India, where demographics are the opposite. It's young and low debt and high savings. So that drives another narrative. The debt cycle itself is a narrative. So you look at these big picture narratives and the really secular ones, and then within that you'll have the secular cycle of commodities, the secular cycle of currencies that generally correlated. So things tend to move in secular cycles, kind of 10, 15, 20-year cycles.
Mm-hmm.
Within it is the business cycle. The business cycle is, you can show, what's amazing is most economists in the world never forecast recessions. Why? Because they use a linear model.
Right.
But anybody, you can show it to an 11-year-old and show them the chart of GDP and say, is this linear or is this cyclical? They'll go, well, it goes up and down. Looks like a sine wave. No, it's a cycle. Of course it's a cycle. Right. Anybody who says otherwise is an idiot. So it's a business cycle. So study the business cycle. When you dig into the business cycle, you find out that it actually is the largest driver of asset movements. So when you look at the S&P year on year, bond yields year on year, copper year on year, emerging markets year on year, the dollar, they're all basically driven by the business cycle. So that gives you a structural framework to understand where you are. So now you've got all of this. Where's all this? So you start looking where you are in the business cycle. You can use something like the ISN, gives you a decent idea, or the ECRI or something like that. But then when you're looking for the investment ideas, start with a chart. Why is that doing that? Why is the Turkish lira at all-time weaknesses today? What does that mean? What's going on? Could that affect something else? So then you start weaving all of these narratives together and looking for when everything comes together is when it becomes super interesting. Usually in macro, the fastest accumulation of returns is in the downside of the cycle, because the upside of the cycle tends to take 5 to 10 years. The downside tends to take 18 months to 2 years. But the movement in that period of time is massive.
Right.
So concentrated returns over a short period of time, which is why most macro guys tend to do better over the down cycle. Of course, there's other great upcycle plays that can play out over time. Yeah, India, the Middle East, there's a bunch of these places that can be very interesting over time. So I look at the big secular narratives. What is really driving the global economy? Globalization being another one, technology being another one. Then you look at what are the impacts, deflation, driving of asset prices, debt bubbles, all of these things. Then you look at secular cycles of assets. Where are we in the real estate cycle? Where are we in the commodity cycle? Where are we in this? And then where are we on the business cycle? And that gives you, out of that, all the opportunities. And then the charts are your way of seeing it all.
So do you use charts particularly like for timing, or do you use it for like, you know, sort of finding the correlations between different assets? Like how do you use charts? Like how do you personally use charts?
I will often just go through charts and just look at what is the monthly chart saying? Is there some odds that I could get out of that? Does it look like something's going to move one way or the other? Am I missing something? Is that consistent with what another asset's telling me? You know, if the Canadian dollar's going up and commodity prices are going down, why are they doing the opposite things? Are they not correlated? Is something I don't know about the story? What is happening? So they give you the texture of everything that's going on. I then look at the correlations between different assets. I look at the correlations with the business cycle, and then I use them for market timing. So I use them for everything.
So one thing that you've mentioned for tracking the business cycle is the ISM PMI. You've written about it in a book called The Global Macro Edge, and there's a video on the Real Vision channel on YouTube as well. So what else do you watch on the business cycle other than the ISM PMI?
I've got like 3,000 charts. But basically, it's all variations of the same thing. Is something leading right now in this cycle? Is something lagging right now in this cycle? Is something indicating where this ISM may go? Or the ECRI, which is a weekly indicator that's useful? Or the market PMI surveys? Or whatever it is. They're basically all proxies for GDP. All I'm trying to figure out is where the economy is going.
Right.
And what's driving it at this point. So, you know, some points into inventories and other points it's the real estate cycle and the other point. So it always changes. So I'm always looking for what those things are. What's moving it? What are the knock-on effects? What's this going to do to inflation? What's this going to do to bond yields? What's it going to do to equities? What's it going to do to commodities, etc.?